This earnings season, two household names have unveiled drastically different stories. Walmart's quarterly revenue smashed expectations at $169.59 billion, but Target took a nosedive with a 20% stock price drop. How did Walmart's e-commerce surge by 22%, and why did Target's cost-saving measures fail so miserably? We're breaking it all down today. The surprising success of Walmart's strategy, Target's struggle with inventory, and what these numbers mean for the future of both retail giants. Stay tuned as we reveal why Walmart's customers are spending more while Target's are holding back. By the end, you'll know the secrets behind these numbers, the missteps, and what this means for shoppers and investors alike. So let's start by looking at the big picture. What led to these drastically different outcomes? On one side, Walmart is hitting new heights while Target is struggling to hold on. This isn't just about numbers. It's about strategy, execution, and how well each company understood what their customers wanted in today's economy. And think about it. Two giants serving the same market, but achieving opposite results. What did Walmart do right that Target missed? Let's talk about it. Walmart's strategy this quarter has been nothing short of impressive. They've been able to tap into consumer demand far beyond groceries, breaking a streak of declining discretionary spending that lasted for over 11 quarters. Their revenue hit an astonishing $169.59 billion this quarter, significantly beating Wall Street's expectations. Walmart's customers aren't just buying essentials, televisions, Apple AirPods, Beats, headphones, and even tires were among the popular items flying off the shelves. But why? Well, Walmart has not only offered value, but also made it accessible in a way that fits modern lifestyles. Their e-commerce sales in the U.S. surged by 22% with big boosts from curbside pickup and home delivery. And get this, 30% of customer orders now include an additional fee for express delivery. People are willing to pay more for convenience. Walmart has clearly struck gold by making it easier for customers to get what they want when they want it. What does this tell us about modern consumer behavior? Are we really shifting our focus towards convenience more than ever before? Now, let's switch gears and dive into Target's struggles. It's a story that contrasts sharply with Walmart's win. Target saw its stock plunge by 20% following its earnings report, its biggest drop in 2 years. Despite offering deep discounts on over 10,000 items this year, Target sales just didn't hit the mark. The numbers tell it all. Revenue came in at $25.67 billion, falling short of the $25.9 billion analysts expected. What happened here? Well, Target's cost-cutting measures just weren't enough to offset the challenges it faced. For instance, the company stockpiled inventory ahead of a potential U.S. port strike, an inventory buildup that ended up becoming a major liability. Holding that extra inventory was costly, and it didn't translate into the sales they hoped for. Digital sales were a bright spot, but not enough to make up for the losses at physical stores, which experienced a 1.9% drop in comparable sales. And here's a question to think about. Was Target's strategy to stockpile inventory just bad luck, or was it a miscalculation that reflects deeper issues? Let's step back for a moment. To understand the difference in results, we need to look at what consumers are doing right now. Consumers are becoming more selective in their spending, focusing more on value and strategic purchases. And Walmart has positioned itself perfectly for this shift, offering a broad range of goods, excellent value, and convenient delivery options. Target, on the other hand, did manage to cut prices, but it wasn't enough. They heard consumers wanted value, so they slashed prices on frequently purchased items like diapers, cold medicine, and ice cream. But here's the twist. Cutting prices doesn't always guarantee foot traffic. Why? Because value-seeking consumers aren't just looking for the cheapest price, they're looking for the best overall experience. And Walmart delivered on that front with convenience, reliability, and a diversified range of products. And so here's the big question. Does lowering prices even matter if you can't match the convenience or the experience of your competition? Stick with us because we're about to unpack how Walmart turned customer behavior into a science. A major factor driving Walmart's growth was its ability to attract higher income shoppers, those earning over $100,000 per year. These shoppers accounted for 75% of Walmart's share gains this quarter. Why did upper income households flock to Walmart? The answer lies in the perception of value. Inflation may have cooled down, but shoppers are still cautious about how they spend their money. Walmart's reputation for everyday low prices mixed with an expanding product range has created an attractive option even for those who could afford to shop elsewhere. And the growth wasn't just in groceries. Walmart also saw increased demand for general merchandise, which signals that consumers trust Walmart to deliver a full spectrum shopping experience at a great value. Their third-party marketplace, increased advertising revenue, and improved digital offerings have positioned Walmart to capitalize on the needs of cautious but resourceful shoppers. Why are higher income households suddenly shopping at Walmart more often? Are these shoppers just chasing value, or is there something about Walmart's changing identity that's attracting a new crowd? Now that we've covered how both companies performed, let's look ahead to the next big challenge. The holiday season. Walmart has already started strong, moving up its Thanksgiving deals to capture early demand. The company's ability to offer deals across both essential and non-essential items could give them an edge in the upcoming quarter. Target, meanwhile, is gearing up with deep discounts and promotional events, hoping to make up for lost ground. Target's Circle Week promotion was a bright spot. 3 million new members joined their loyalty program during this event. However, the real question remains, can they effectively translate that into long-term growth, especially as they face rising costs and shaky consumer confidence? Let's talk investment because both Walmart and Target have provided a roller coaster ride for shareholders this year. Walmart stock has surged by 64% in 2024, far outpacing the S&P 500. On the other hand, Target stock has seen a decline of 10% despite the broader market rally. The differing performance isn't just about sales, it's about which company is better positioned for what's coming next. Walmart's strategic investments in e-commerce, a third-party marketplace, and customer convenience are paying off, while Target's efforts to cut costs and boost inventory seem more like reactive measures than a proactive strategy. Investors are noticing the difference, and so should you. Please remember, this video is not investment advice. Always do your own due diligence and consult with a professional financial advisor before making any investment decisions. So, for those of you wondering, is Walmart the clear winner in retail investing, or does Target have hidden potential that's yet to surface? It's clear that Walmart and Target are on very different paths this earnings season. Walmart is thriving by understanding its customers, not just meeting their needs, but anticipating them. Target, meanwhile, is fighting to regain the momentum it's lost due to inventory issues, cost pressures, and struggles to keep up with consumer demands for convenience. Whether you're an investor, a consumer, or just a fan of the retail world, the lessons here are powerful. Winning in retail today isn't just about discounts or flashy promotions. It's about consistency, value, and giving consumers what they want before they even know they want it. So which retailer will come out on top in the next chapter of this saga? As the holiday season heats up, Walmart and Target will go head to head, and we'll be watching every step of the way. Make sure to subscribe so you don't miss our next update, because in the fast-moving world of retail, the winner today might not be the winner tomorrow. Thanks for watching, and let us know in the comments, which side are you on? Walmart's record-breaking momentum or Target's comeback potential? Share your thoughts and predictions in the comments below.